my goal is to get to $1 billion in revenue. So I'm not going to be able to do that in Australia. So I am looking at our strategies internationally. But first things first, let's just dominate locally and get ourselves in a position where we can use that as the platform to expand internationally.
Booktopia Group is Australia's largest locally owned online book retailer, founded in 2004 and now selling one book every 4.6 seconds, in addition to ebooks, audiobooks, DVDs, calendars, and related products. It's grown through acquisition, including buying Angus and Robertson and the University Cooperative Bookshop, and it's now pushing into new market segments as it heads into an ASX listing next month. Joining me to discuss this new chapter for Booktopia is its founder, CEO, and managing director, Tony Nash. Tony, welcome to TCN TV.
Thanks for having me.
Can you start by telling us, why did you decide to list the company that you founded on the Australian Securities Exchange?
It was a decision that we had planned to do actually next year, 12 months from now. But what happened was the pandemic kind of accelerated everyone down the track much further and faster than everyone expected. So we had already deployed some automation this year. We invested about $12 million in automation to move from 30,000 individual books out per day to 60,000. And that only went live in the last few weeks. So we were hoping to wait a whole other year to kind of go to the market and say, look how much we've grown, look how much is dropping to the bottom line. But the pandemic kind of said, you got to go now, because the spotlight is on e-commerce. And so we decided to push it forward. And it literally is like going down to Bondi Beach on a hot summer's day selling ice cream. It is definitely the flavor of the month.
Well, taking a closer look at your opportunity, Booktopia puts Australia's addressable book sales market at $2.5 billion and expects further growth over the next year or so. What is driving this growth, and how do you believe Booktopia can get an increased share of this addressable market?
We've always grown. I mean, if you look at the way that our growth trajectory has gone from, say, $10 million in 2008 to over $200 million this year over 10 years. And even in the last few years, our growth rate, I think, was around 25%, 26%. Because we're growing so fast, it's hard sometimes to keep up. So we have kind of been there for customers who have lost their bookshop in their local area, or they've moved from buying locally to buying online, which is, of course, what's happened a lot over the last few years, and certainly through the pandemic again. So a lot of the growth for us is actually coming out of that transition of people moving from offline to online. And because we are kind of like the biggest bookstore on Main Street of town, people kind of end up with us because there's really no competition. $205 million in revenue for FY21 is what we're on track to do. And number two is doing around $25 million. So there's not daylight between us and number two, there's days and weeks between us and number two. So when people move online, we're kind of riding that wave through as everyone is shifting. So our growth, we're very comfortable with our growth trajectory and have been for so many years.
Now, you have been talking up the advanced proprietary software and algorithms, as well as Booktopia's highly scalable infrastructure with technology-enabled supply chain attached. How do these stack up against those perhaps the global competitors like Amazon and the Book Depository?
Well, of course, Book Depository is Amazon. They bought them in 2011. A lot of people don't know that, actually. Book Depository doesn't hold any stock, so they literally cross-stock. So orders come through the website, people order from Book Depository, they come to their warehouse in the UK, and then they get shipped mostly in individual parcels to the people, which can take a few weeks to get to Australia. So from an Australian perspective, being local and having the product here ready to go has easily been, for Booktopia's in Book Depository, we've easily competed with them. Amazon's slightly different. They arrived in Australia a few years ago. One of the reasons why we didn't list 4 years ago was because Amazon announced they were coming to Australia and everyone thought they were going to annihilate us. Of course, we've gone from 80 million to over $200 million in revenue during that time. Why? Because Amazon really is not focusing on books anymore. It's less than 3% of their revenue. They prefer someone else to sell the book to someone else, and they take their 20% clip of the ticket by facilitating that through the marketplace. Everything about Amazon is really about digital, AWS, Even in the books area, Kindle, Audible, that's their kind of model. And physical books is something that it's still there. It's part of their DNA, but it's not a priority for them. So we don't feel like we really have much competition locally in Australia.
Okay, now to grow organically, Booktopia obviously has to increase website traffic and conversion rates. What's the company's strategy to deliver continued organic growth?
Well, we've always done what we do is we obviously have a great SEO. So our background before Booktopia, we were internet marketing consultants, SEO, that's what we did. And before that, we were internet software people. And so we've been on the internet for almost 25 years. And so to drive traffic, you actually need to be at the top of Google. So our Google ad programs, we've been running those. It's some of the biggest in Australia, of course, for what we do. But our affiliate programs, people linking to us, it's kind of like the all roads lead to Rome approach to the way that we kind of appear on the internet. And when you've got more people moving to online and you're riding the wave, then people are going to come to you. So if you're at the top all the time and it seems like everything's kind of leading to you, as people are migrating from traditional retail purchases to online purchases, we're capturing that. And so I think that's very much, people need to understand that Australia is still very much lagging behind Europe and North America when it comes to online penetration.
Now, your business strategy in terms of growth also includes the potential for bolt-on acquisitions, but only in existing Australia and New Zealand markets. With the operational advantages Booktopia has, why is a push into overseas markets seemingly off the agenda for now?
I feel that we can get from 200 million to 500 million in Australia. It's not easy, but I feel like that is doable and comfortable within a $2.5 billion industry. So my goal is to get there, and I feel like we can get there faster doing that than spreading our wings and moving internationally. However, I think probably in the next year or so, year and a half, New Zealand will probably come onto the radar. Asia is definitely in my sights. My goal is to get to $1 billion in revenue. So I'm not going to be able to do that in Australia. So I am looking at our strategies internationally. But first things first, let's just dominate locally and get ourselves in a position where we can use that as the platform to expand internationally.
When it comes to your IPO, Booktopia plans to raise $43 million in your upcoming raising. Where will this new capital be directed? And are existing shareholders simultaneously selling down their stakes in the company? And if so, to what extent?
So $18 million is a shareholder sell down. My co-founders, mostly my brother and my brother-in-law, I'm not selling down as the CEO in this IPO. It's a founder and CEO-led IPO, so I'm here for the long term. That means 25 million of that is going towards new issued capital and going to be injected into the company. Part of that is actually going to go into more automation. So we've invested a lot in 2020 into outbound capacity to go from 30,000 units to 60,000 units per day, which should take us to around 350 million in revenue. The other part of the investment that we've kicked off already, and we plan to roll that out through the rest of the building, is the robotic technology for inbounding. We have a capacity at the moment of 800,000 units, and I want to expand that out to 1.8 million units. So we have more stock ready to go of what people want, and that's part of that strategy. There's also a bit of debt that we created when we did our initial investment in automation earlier this year. We've already kind of raised enough cash to clear that. So part of that is going to help us get rid of that debt that we used for a 12-month period, which is good. And books is a bit of a lumpy kind of industry where if you've got suppliers, quite often they're sending off their invoices and you've got to pay them within 30 days or whatever it is. Books is at the end of the month, you've got 30 or 60 days to pay those invoices. But everything is almost always due on the first of the month. So it's a bit of a high tide, low tide kind of lumpy part of the fun of your cash position. So part of that, I just want to address that because we've had to kind of maneuver that over the years as well.
And finally, Tony, physical book sales still account for more than 3/4 of total Australian book sales for Booktopia. What would be the margin when it comes in terms of ramifications on an unexpected uplift in digital books as a % of total book sales over the coming years?
The ebook sales are actually going backwards. A lot of people don't realize that. People have tried ebooks and it's not for them. They're saying to us, and the research is indicating it, is that they spend so much time on their phones and their computers. The last thing they want to do is be on another screen to read a book. So books has definitely held its own. And I think through the pandemic, people have kind of reignited their, let's just say, relationship with a book, and they've enjoyed the time that the two of them have had together. And so I think physical books, and you got to understand, I'm a technologist. So technology, software, building software is all part of my background and my company's background. So you would think that digital would be kind of obvious, but no. Physical books is definitely here to stay. It's a 570-year-old industry. It's very much a part of the DNA. I think people have worked out that's actually preferences. And keeping in mind, a lot of books aren't just books that you read from cover to cover. There's technical books, there's legal books, there's professional books, there's kids' books. You can see behind me on the video, beautiful, lavish coffee table books. There are so many books that don't really fall into that kind of category of a e or an audio. And so therefore it will never be as big as the physical. They just can't be. And who would want to listen to like a legal textbook on audio? Oh my God, unless you want to go to sleep, you're suffering from, insomnia. But it's a very diverse range of product. Over 33 million titles are out there. So physical books are definitely here to stay.
Well, Tony, thank you for the insights and all the best for your next chapter, which is, of course, listing on ASX in December this year.
Thanks for having me.
And thank you for watching. Now, if you like what you see, please be sure to like and share the video, subscribe to TCN TV and drop us a comment. Tell us who you would like to see next and what you would like me to ask them. Or if you're an investor, send us an email so we can keep you in the loop with the latest ideas to empower.